The big theme that has been, and Tom mentioned this before, this kind of technological innovation, disruptive technology, that type of thing could be where people want to divert some funds because they're looking for that moonshot, so to speak. Talk to us a little bit about what exactly is going to be the big move here with regard to how people will invest in what they perceive to be disruptive technology, and then what exactly is disruptive technology in your mind, and what types of companies are we talking about that will fill that particular niche in investor portfolios?
Yeah, so in my opinion, thematics are really the new active management, whether meaning thematic ETFs, whether they're actually actively managed or being done so in a systematic way. So when we think about moonshot innovation, it's not just based off of finding the next meme stock. It's actually done in two ways. So systematically scanning corporate filings, so your 10Ks and your 10Ks and 10Qs, to understand if companies are using terms in their industry which are more associated historically with innovation than their peers. So this gives a sense of a corporate culture and vision toward innovation, but that's not enough. Just trying to create an algorithm to identify words gives you a universe, but we actually make sure the companies are actually walking the walk too. So part of the scoring is, does a company, again, relative to their peers, spend more on research and development relative to their sales? So when you pair those things together, you can identify a history of innovation. Now, historically, of course, Amazon, Tesla, Apple would all have been part of the portfolio, but we purposely focus only on small to mid-cap companies. So right now, about 40% of the portfolio is small, 30% is traditional microcap, and then the rest is really in the mid-cap space. So the 50 names in the portfolio are going to give you exposure to everything from companies involved with genetic engineering to cybersecurity, wearables, virtual reality, and clean tech. And these are names that some folks might not be familiar with, but they're doing really exciting things. So Vuzix, Microvision, Immunity Bio. Again, that ranges everything from companies working with smart glasses for telemedicine and warehouse use to Microvision focusing on miniature lasers that are used in 3D displays. And then Immunity, it's customized cancer and disease treatments kind of based off of your individual profile. So these are challenges that companies are tackling today that are going to change the world, whether in the next year, 5 years, 10 years, all at the very, very early stage of their cycle, of their profit cycle. And now would be the time to begin to think about adding some of these names, adding ETFs like this, so you can still focus on growth, but just do so in a different way than just the mega cap growers.
Brendan, I wonder, it's hard enough to find these types of stocks in the U.S. markets where I would argue things are more transparent than they are in China. I would argue that things are easier because you have more kind of disclosures and people just understand the businesses a little bit better than they do perhaps in China. How exactly then do you find the next big thing, the next disruptive technology company, the one that's going to change things from a small and medium-sized company standpoint in a place like China?
Well, I think it's about going to China, working with partners, boots on the ground in China, we have a full team there. We're in constant contact on a nightly basis with our institutional brokers. And China certainly, U.S. foundations, pension plans, they've been investing in Chinese private equity for 20 years now. I mean, no one really brought this up when TikTok fell under the ire of the Trump administration. It turns out two of the largest shareholders were two U.S. private equity firms. So I think we're seeing a movement from a lot of this private equity that in China has done enormously well has become public equities. Investors are getting attuned to the opportunities, how the economy's evolved to a domestic consumption. At the same time, you have MSCI adding the stocks that we hold within KBA that Tom referenced to their indices. And so ultimately, investors are going to have to understand China. It's already 40% of MSCI emerging markets. I think in 5 years, it'll be 50%, and I think in 10 years, it'll be 60% of emerging markets. And that's really ultimately the value add of Crane shares is endeavoring to earn the trust of investors by providing balanced insights on what's happening in the economy and capital markets.
I'm waiting to see, Brendan, when China doesn't become a emerging market anymore, and it's probably a developed market because it's such a big part of these types of things for sure. But that aside, gentlemen, thank you. Tom, I want to give the last word to you. Disruptive technology is one of those big thematic type investment elements that a lot of investors are looking at because of what we've seen with the ARK Invest ETFs and everything else. How exactly do you see that trend playing out? Are there going to be more entrants, people trying to find that next disruptive company? And by the way, these are in many cases small and mid-cap companies. It's not exactly easy to take large positions in these things without moving the market on them.
Well, a couple things, Dom. First of all, the innovation that we've seen in the ETF space just continues to be fantastic, and we applaud it on a regular basis, especially when you have companies like what these guys represent. The big thing, I think, for the average advisor and the average individual investor to remember is look at your portfolio. You probably have a home country bias where a greater percent is allocated to the U.S., with a high correlation to the S&P 500, which has worked really, really well over time. However, what the COVID situation taught us is growth and innovation happens really quickly. It's almost been sped up. So you want to make sure you have a portion in these innovative companies to future-proof your portfolio. If not for you, at least for your kids and your grandkids. And there's so much out there to choose from today in a disciplined way that it gets really, really exciting.